All right, I want to get the reading right now from Ray Wong and Michelle Snyder, Constellation Research CEO in the case of Ray, Market Gauge Group Managing Director in the case of Michelle. Michelle, you know, it's interesting when we look at what the bank was doing there in England. It was trying to shore up support and at least show that it was willing to intervene to stop a free fall, and it worked. But you know, in retrospect here, not to the degree that maybe it had hoped, but enough to give our market a boost. What did you think of that?
Well, I definitely think that there's a double-edged sword to that. On one level, right, we got some temporary relief. We saw our yields come down, the dollar dropping a bit. But on the other level, I think it's really kind of concerning because we're still really very precarious when it comes to inflation. And there's nothing going on out there that's going to help the situation, including this storm, because the food supply is still very low. Food prices are still really high, which means the Fed is really still stuck. And if there's any kind of doubt that the central banks really have this under control, like we just saw actually with England, then this could really turn out to be a disastrous situation for the market, but really bullish for the commodities market. This is kind of what we've been thinking all along.
You know, you think about it, Ray, when it comes to inflation fight, the last thing you want to see a central bank do is buy up, you know, Treasury securities, or in this case, British notes and bonds, because that would artificially sort of calm at least the threat of things free falling. But in so doing, you're making the fight on inflation more difficult. I cannot imagine, as we're unwinding, you know, all of that debt in the United States and the Federal Reserve is tapering through that, it would do a 180, even in this environment, maybe because of this environment. What do you think?
Yeah, it's a big point, right? I mean, as QT kicks in, the dollar is going to get stronger and stronger. You saw what happened in China, where the yuan is basically now 7.2 to a dollar, and they've also put in some of the controls. So the strong dollar is a double-edged sword. It means that we can purchase imports from other countries very cheaply, but our exports will take a hit. And of course, direct foreign investment in other countries is going to go down. So overall, none of this is really addressing inflation. Those are really policy issues that have to be addressed, and it really comes down to energy prices and trying to get multiple sources of energy available to everybody, and of course trying to be able to tamper down wage inflation where we can, and we're going to see that through different strikes, different labor unrest. That's going to be a very precarious situation over the next 6 to 12 months. You know,
I get the feeling, Michelle, and you're closer to this than I'll ever be, that the Federal Reserve is intent on bashing inflation, whatever harm it might cause to the economy, slow down even recession. And that's why we see these 3/4 point hikes, one after another. I guess they're factoring in still a fourth next month. And that's going to be the drill. That reality, well, today we might be seeing a bounce from that. It hasn't changed that reality, has it?
Not at all. And in fact, what's so interesting is what we're also seeing is that you can raise the rates as they're doing. And you can destroy demand in many areas, like we're seeing in housing and cars and some things that are really not necessarily essential. But you cannot really change the narrative in terms of the shortage of raw materials. And as soon as that demand spikes, you see what happens. Things go out of control, like the storm, which you mentioned at the top of the show, or at least before we came on, about all these companies that actually give supplies. They need raw materials, so that's going to help the commodities. So essentially, really what's going to happen here is right now the Fed is totally focused on the fact that our economic stats haven't been that bad. So they're still saying inflation, inflation, inflation. The question is going to be what comes first. Are they going to drive us into a deep recession and then have to ease up and commodities go out of control again? Or do they kind of like continue to raise the rates, but yet what we're still seeing, which is like fights over sugar in Tunisia and social unrest over food all over the world, no matter what they do, now they're really in a stagflation environment that it's going to be hard to get out of.
All right, final word on that. By the way, Apple stock is down 3% because now it's saying, those sales might not be so robust after all. More to this.